Good morning, Bitcoiners, and welcome back to your economic calendar, where we cover the news you need to know for the week ahead in Bitcoin. Today is Monday, June 12th, and as always, we have a very special episode for you. This week, inflation takes front and center stage once again, and the Fed's view of transitory inflation gets put to the test as we get a CPI inflation reading out of the US for June this week. Details on when that is and what we can expect in today's episode. We're also going to talk about the US equity markets, which are all at a trifecta of all-time highs with the major indices, with the NASDAQ, S&P, and the Dow Jones all reaching all-time highs ahead of earnings season, which starts in earnest this week. And last, but certainly not least, there's a lot of talk about GBTC units becoming unlocked and what that could do to the price of Bitcoin. We're going to break down that trade and how it could impact Bitcoin prices in the medium and short term. So, as always, grab your coffees. It's going to be a great one. Starting as we usually do with Bitcoin, we see that last week was another week of narrow trading ranges for Bitcoin, closing at $34,258, down 2.92% for the week. Now, if we can see here, the level that it closed at was actually the lowest close since February 1st, 2021. So wanted to highlight that, as it was the lowest close actually we've seen for quite some time. Now, taking a closer look at the market, we're starting to see some interesting patterns in market dynamics in Bitcoin. One of the ones we wanted to highlight, as you have in the back of your screen right now, is Bitcoin's put-call ratio. And the interesting thing here to note is that the ratio itself has been dropping quite significantly since its peak in April 14th or on April 14th. The April 14th also happened to be the market all-time high, which was right around the Coinbase listing, if we remember. And you can think of this put-call ratio as the number of investors looking for downside protection divided by the number of investors looking for upside participation. So this number is coming back to historical equilibrium levels as prices settle. So again, the higher this ratio is, the more people are looking for downside protection. The lower the ratio is, the more balanced it is relative to people looking for upside and downside protection. So this coming down is actually quite a good sign. You can see how when the market hit its peak, there were a lot of people looking for downside protection, not so much anymore relative to April. So that is an interesting and positive note to highlight. Now, looking at the perpetual futures funding rates across major platforms, I'm just going to pop that out here. So here are the funding rates, and let's just put one so that we can there's a lot of noise when all of those lines are there. But now with Kraken, we basically, and this is the funding rate for Kraken's perpetual futures, and there's been a few pieces, and as we've highlighted here over the last few weeks, the funding rates for the perpetual swaps have been consistently negative for quite some time. And we see that, in essence, first off, let's talk about what this means. So when the perpetual swaps, or when the funding rates for the perpetual swaps are elevated, it means that people are essentially paying a higher level of interest, or an increasing interest rate to take that position. So when the funding rates are negative, it means that essentially people that are short the contract are paying people that are long the contract. And as these rates vary, it becomes more expensive or less expensive. And that's how the exchanges try to get people to take the other side of those trades. Now, what we can start to see here is that although it was quite exaggerated, let's just say like in late June, so from the 23rd to the 25th, we can see that it was hovering around negative 0.07. Right now, it's actually starting to teeter back across 0%. And what this means is that people are becoming less leveraged to the downside, and market positioning is becoming more neutral. In other words, investors are becoming less bearish. So again, another encouraging sign. Now, if we look at the last time that we had an increasing or a relatively long period of negative funding rates, this was from August 31st until October 19th, 2019. So right around here, as you can see, during this section here, we had the rates remain negative for quite some time. And if we look at when that was in the Bitcoin chart, so again, going back from August 31st to October 19th, 2020, which is right here. So if we look at when the last time this happened was, oh, sorry, I lost my bar here. Now, if we look at the last time that this happened, this period where we had negative perpetual swap funding rates for quite some time was the consolidation period when Bitcoin traded from the range of around $10,000 to $13,000, which was the consolidation period that preceded the drive to $20,000. So again, encouraging signs in the sort of Bitcoin fundamentals under the hood. And if we look at the futures curves, which we do here often to look at contango versus backwardation, we see that the backwardation is all but gone. We still have some curves that show some backwardation, like this one in Deribit. But for the most part, all of them are pretty much showing contango now. We see Kraken and Deribit being the sort of lone outliers now showing some backwardation. But again, most of the curves are in contango. So the takeaway from market positioning going into this week is that investors don't seem to be expecting a large negative move down, but they're not bullish just yet. So more sideways movement could be in the cards for this week. Moving over to the S&P 500, we see that, as we mentioned in the beginning, it was a trifecta of all-time highs across major market indices. As we can see here, the S&P finished last week up 52 base points at 4,372 points, and we are already seeing it hit a fresh all-time high again this morning. If we look at the NASDAQ last week, again, fresh new all-time high, up 67 base points. Dow Jones, again, fresh new all-time high, up 24 base points. Now, interestingly, the Russell 2000, which is an index that tracks small capitalization companies within US equities, is being left out of the all-time high party. And just to highlight that it finds itself below its rally confirmation level that analyst Tom Lee from Fundstrat highlighted at 2293, currently at 2269. Interesting to see that all the big major large cap companies are making all-time highs, whereas the Russell seems to be lagging just a little bit. Now, the all-time highs come ahead of the start of second quarter earnings reports, which start in earnest this week. We have details of which companies are reporting, relevant companies to Bitcoin reporting later this week. And as always, these Q2 earnings always open up the door to the potential commentary around Bitcoin during these earnings calls, which have the potential of moving markets. So always important to keep our eyes out during earnings season. Now, what's helping these rallies is rock bottom interest rates and a stable US dollar. And if this continues and earnings impress, equities could be well poised to go even higher. Now, if we look at the treasury yields, which we highlight here often, and as we've covered, they can be a big driver in the moves or market sentiment in general for US equities. Treasury yields had another massive drop last week. Even though they closed just down 5.38%, they were down almost 10% intra-week. And just to highlight how big this drop has been, here 1 second, we're just going to measure this from peak to trout. And you can see that over the last 99 days, the Treasury yield has dropped 24%, which is a massive move in Treasury yields. Now, what investors seem to be telling the Fed is that they don't think the Fed will be able to raise rates anytime soon. And the upcoming consumer price inflation reading or consumer price index reading for June, which comes out this Wednesday, has the potential to significantly move bond yields and therefore the markets. And we'll get into that in more detail in our What's Ahead section today. But again, yields are down 23% over the last 99 days, and this trend could likely continue if we keep getting soft inflation readings. Moving over to our gold price analysis, we see that gold caught a big bid last week and closed the week higher by 1.15% at $1,807 per ounce. Looking at it from a technical standpoint, last week's move was very positive. And gold broke out of this descending range once again, and it looks poised or well positioned to extend its run. Now, remember, gold prices inversely track the real return of the 10-year bond, meaning that as bond yields compress and inflation rises, gold should do very well. This is what we see happening now. Conversely, when bond yields rise faster than inflation, gold prices suffer. So again, interesting to keep our eyes out, or interesting to keep paying attention to the price of gold relative to inflation and bond yields. Moving over to DeFi, we see that the DeFi index was one of the lone winners in crypto last week, finishing up 2.17%. And we see that Ethereum last week was down 7.98% at $2,138. Now, we're going to talk about a few key developments in both DeFi land and Ethereum. First, we can start by the Ethereum headlines. And last week, and I'll just put the article behind the screen while we talk about it. But last week, essentially what happened was a developer created a smart contract to help Ethereum miners reorganize blocks in order to claim higher miner rewards. Now, while the practicality of the smart contract has not yet been proven in the wild, the theoretical proposal has started a very heated conversation within the Ethereum community. We'll talk about this more in a second once we chat about the DeFi headline. But moving on to the DeFi headline, we see that the ChainSwap protocol suffered an attack as a result of an exploit, and investors in that protocol lost up to or almost $8 million US. So again, seems like every week we seem to be reporting on a new sort of rug pull in DeFi, which just highlights how tricky this space is to navigate. So going back to the Ethereum miner smart contract, there will likely be continued conversation around miner behavior in Ethereum. And this is because the network is currently preparing to pivot from proof of work to proof of stake. Now, this move will make Ethereum miners who have been protecting the network for years since its inception, the move to proof of stake will make miners obsolete. So all that hardware, all that investment essentially goes out the window once that change happens. And it will be interesting to see how the Ethereum community manages throughout this period of transition. Moving on to our Bitcoin mining difficulty commentary, we see that last week's difficulty adjustment worked like a charm. Network fees have remained quite low throughout the weekend. Right now, just looking at next block confirmation, you're looking at 27 sats per VByte, which is still fairly reasonable for transaction costs. And quick update on the hash rate since this whole China move has been happening. Since the last adjustment, hash rate has continued dropping from the network, and the next difficulty adjustment is currently signaling for another 9% drop in difficulty. And lastly, as always, we leave you with what's ahead for the week. So in this section this week, we're going to break down a couple of things. For one, there's been a lot of talk around the Bitcoin community about the GBTC unlocking of units. So we're going to spend a minute to break down that trade, what it means, and what it could do to Bitcoin price near term and medium term. And we're also going to go over our economic calendar and our earnings calendar for major economic data and relevant earnings this week. So let's go right into the GBTC trade. All right, so let's break down what the GBTC unlock means and go over the trade mechanics. And first, let's do a little bit of refreshers just so that we can go over the trade with a little more ease. So to start, GBTC is an investment vehicle that owns Bitcoin and lets investors own units of the fund. By owning a unit of the fund, you have a claim to the proportionate share of Bitcoin that fund owns. If the fund has 10 Bitcoin and there are 10 units, then each unit should trade at the equivalent market price of 1 Bitcoin. Because of market dynamics, the price of the units usually traded at a premium price to the underlying Bitcoin that the fund held proportionally. This created an opportunity for investors to mint new units of the fund by contributing Bitcoin and getting units of the fund in return. They could then sell the units of the fund at a premium, buy back the Bitcoin they contributed, and keep the difference. This was known as the GBTC premium arbitrage. Now, there is only one catch. When you send the Bitcoin in to turn them into fund units, you have to wait 6 months from the time you send the Bitcoin to the time you get the units. And you need to have those units to sell those units to rebuy the Bitcoin and close the trade. So let's keep that in mind. Now, if we go back 6 months from where we are right now, that would bring us back to January 2021, which just so happens to be the month during which a large amount of Bitcoin were contributed into GBTC. So again, to highlight that, let's go to the GBTC assets graph. 1 second. GBTC assets. Here we go. So I am just going to make this bigger and put it here so everyone can see it better. Great. So in here we see that, and I'm just gonna zoom in on the GBTC holdings. So if you can see here, from January 14th, so on January 13th, call it January 12th, the fund had 607,000 Bitcoins. And that went to, if we go to January 26th or January 28th, that went to 648,000 Bitcoin. So that is basically around 41,000 units, 41,000 Bitcoins were contributed into the fund on the last half of January, meaning, or that could mean that there could be as many as 41,000 Bitcoin equivalent of units being unlocked of the fund to investors throughout the month of July. Now, as the chart that we just saw, as the chart that we are seeing suggests, a lot of these contributions were done on the second half of January, which means they will be becoming unlocked or available to be unlocked in the later half of July. Now, going back to the other part of the trade, because GBTC is now trading at a discount to its net asset value, and this is the graph that you can see here. Second. So this graph here, you see that GBTC is currently trading at a 11% discount from its net asset value. What this means is that once investors get their units, if they wanted to close the trade, they would have to sell those units at a loss. They would be locking in a loss because when they sell those units, they will not be able to rebuy the same amount of Bitcoin with the proceeds. So if they did this, so if they did close the trade, what they would have to do is sell units of the fund, but also repurchase Bitcoin on the spot market to really close that trade. A lot of the investors that participated in this trade borrowed Bitcoin to contribute to the trade, and therefore they need to return the Bitcoin back to close it, meaning they have to sell the fund units and buy the Bitcoin to send it back. What this does is that this would put downward pressure on the unit prices of the fund and upward pressure on the spot prices of Bitcoin, which should, in theory, reduce the gap between the two and hopefully narrow this premium and bringing it back to 0% or have the fund trade closer to net asset value. So now that we've talked about the trade and broken it down, let's go over some of the relevant earnings and economic indicators that we get this week. So as always, let's go over the major economic indicators and relevant earnings that we get this week. So on Tuesday at 8:30 a.m. Eastern Standard Time, we get the Consumer Price Index reading for June. Now, expectations are for a 0.5% month-over-month increase and a 5% year-over-year increase. Look for markets to cheer any numbers below that and sell off with any numbers above expectations. Now, why this is the case is because a higher number than this would essentially challenge the Fed's transitory inflation view. A lower number than this would essentially reinforce the Fed's transitory inflation view. Reinforcing the Fed's view would mean lower rates. Challenging the Fed's view would mean potentially higher rates. That's why the market could potentially react that way. Also on Tuesday, we got JP Morgan and Goldman Sachs both reporting before the bell. And at 2 p.m., we get the federal budget in the United States. So that's it for Tuesday. On Wednesday at 8:30 a.m. Eastern, we get producer price indexes for June. Expectations are for a 0.8% month-over-month increase, and similar to the CPI that we just highlighted previously, look for markets to cheer a number below expectations, and it's for similar reasons on the yield dynamics. Also on Wednesday, we get earnings reports from Bank of America, Wells Fargo, BlackRock, and Citi, all before the bell. And at noon Eastern, 12 p.m. Eastern, we get a monetary policy report from Jerome Powell, chairman of the Fed, to the U.S. Congress. Again, that starts at noon on Wednesday. Thursday at 9:30 a.m. Eastern, we continue that testimony from Jerome Powell to Congress on monetary policy, and also Morgan Stanley reports before the bell on Thursday. Lastly, Friday, we get retail sales for June at 8:30 a.m. Eastern, as well as consumer sentiment in the U.S., and at 10 a.m. Eastern, we get business inventories for June in the United States. Now, business inventories will be an interesting one to watch, as a number above the 0.5 expected increase would signal potential future deflationary pressures from inventory buildups. So again, we've covered a lot. It's a big week in the markets, and we welcome any feedback, any comments, any questions you have on the video that we had today. Please feel free to drop it in the comment section, and we'll look to address your comments and include your feedback in the next episode. If you liked it, if you shared, or if you learned something today, and if you like this episode, I welcome you to like it, share it, and subscribe to our channel. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can earn the market-leading 9.5 APY rate on your USDC and up to 6.1% on your Bitcoin. We also have the best market-leading rates for all of our Bitcoin-backed loans. So check us out. Thanks, everybody. See you next time.